The David Swensen Portfolio, as the name implies, is based on the late David Swensen's management of the Yale Endowment Fund. Here we'll take a look at its components, performance, and the best ETFs to use in its construction. The David Swensen Portfolio, also called the David Swensen Lazy Portfolio, comes from portfolio manager David Swensen, who was the chief investment officer at Yale University from 1985 until his death in May 2021. His book Unconventional Success details how retail investors can use the portfolio outlined in this video to mirror the Yale model, though note that the specific portfolio Swensen used for the Yale endowment is not exactly the same as the Swensen portfolio discussed here, because he was able to use somewhat exotic products only available to institutional investors, like private equity, hedge funds, venture capital, etc. The David Swensen portfolio asset allocation looks like this: 30% total US stock market, 15% international stock market, 5% emerging markets, 15% intermediate treasury bonds, 15% TIPS, and 20% REITs. Similar to the Ivy portfolio, we see a heavy 20% allocation to REITs. Unlike that one though, the Swensen portfolio doesn't include commodities, and I like that. I also like that the portfolio does not use gold. Swensen had a particular affinity for TIPS, or Treasury Inflation Protected Securities, a relatively new type of Treasury bond indexed to the CPI, or Consumer Price Index, the common measure of inflation. This is interesting, as most lazy portfolios ignore TIPS altogether or give them a smaller allocation. Rick Ferry is fond of TIPS as well, suggesting that retirees should probably have them as half of their fixed income allocation. I agree. In this sense, the Swensen portfolio is not unlike the famous all-weather portfolio, attempting to sail through different economic environments unscathed, though Dalio uses gold and broad commodities as an attempt at inflation protection instead of TIPS. In fairness, TIPS weren't even around yet when Dalio first proposed the all-weather portfolio's components. I also agree with Swensen's use of treasury bonds and exclusion of corporate bonds. He maintained, like I do, that treasury bonds offer superior downside protection alongside stocks, and corporate bonds don't sufficiently compensate the investor for their extra risk. That said, 15% in intermediate treasury bonds is not really going to provide much protection. I think it would probably be more sensible to make them long bonds instead of intermediate. Furthermore, TIPS and intermediate bonds are likely unsuitable, unnecessary, and almost certainly suboptimal for the young investor with a long time horizon and high tolerance for risk. In my opinion, this portfolio is better suited for retirees and those approaching retirement. But at that point, I'd also want to increase the bond allocation. The Swensen portfolio relies heavily on REITs, having them comprise 20% of the portfolio. This seems a bit odd to me, as we now know REITs are not a distinct asset class, are not a reliable inflation hedge, and don't offer much of a diversification benefit. Moreover, their returns seem to be explained by exposure to the size, value, and credit factor premia. Thus, they can be replicated with small cap value stocks and lower credit bonds. I don't have a problem with 10% or so in REITs, but 20% seems like too much in my opinion, when that valuable space could be given to stocks or bonds. Now let's talk about the historical performance of the David Swensen portfolio. For the period 1997 through May 2021, this portfolio and the S&P 500 have been pretty close from a pure returns perspective, with the former obviously having a higher risk-adjusted return due to its lower volatility. M1 Finance is a great choice of broker to implement the David Swensen portfolio because it makes regular rebalancing seamless and easy, has zero transaction fees, and incorporates dynamic rebalancing for new deposits. I'll provide a link to my comprehensive review of M1 in the description. Utilizing mostly low-cost Vanguard funds, we can construct the David Swensen portfolio pie with the following ETFs: VTI at 30%, VXUS at 15%, VWO at 5%, VGIT at 15%, SCHP at 15%, and VNQ at 20%. I'll provide a link in the description below to use this pie in your portfolio on M1.